Hey, ladies and gentlemen, Jimmy here. How are we doing today? Let me know who we have here in the chat. I see already a few names. I see Igor. So where are we from, guys? You guys, please bear with me. I think I have some little thing with my microphone. It's echoing here on my end. Probably not on your end. So, guys, how do we feel about the coming halving? Oh yeah. Okay, the ego is done. Bullish, bullish, bullish. Yeah. So, guys, first of all, there's like a halving event going on, of course, or soon. I mean, we still have like a few blocks before we're gonna witness the fourth halving together. So, what we are doing is we're celebrating a halving celebration party. Actually, um, let me pop up my screen. Share. I'm gonna share my entire screen. So this is going on, guys. At block 8,000, 840,000. Sorry, I had to think about it. 840,000 blocks. Miners will just earn 3.125 Bitcoin. As of now, miners can earn per block 6.25 bitcoins. Of course, this is going to have a major impact on the ecosystem totally entirely. But however, I don't really feel and believe that this will, hey guys, that this will have an immediate impact on the price on day one. It's gonna take a few days, I think at least like a few weeks or months before we're gonna really witness the impact of this supply of this well, let's say like this supply shock. As we know, around 19.68 million bitcoins already in circulation. uh, as of now, 900 bitcoins can be mined. Soon, 450 bitcoins on a daily basis can be mined. So the question is, what will this do with the price? What happened actually before? And what will crypto do in general, especially Ethereum, the majors, the high caps, and the low caps? So I have my own thesis around that. Let's start first with Bitcoin. These lines are gonna make my screen a little bit bigger and remove myself from the screen because I want you to see the screen. Yeah. So we already witnessed a few halving events. The first one was in November. So before that halving event, miners could earn 50 bitcoins per block. That's amazing if you think about it. So what happened the first few days after the first Bitcoin halving event? Well, I will tell you. And let's um, analyze this together. Of course, it was like a massive pump, but bear in mind at that time the market environment was totally different. We had different market participants in the Bitcoin ecosystem. It was relative new. As you can see, it was just trading around $13. Honestly, I even, I was totally unaware there was such a thing as Bitcoin. But what we can see here is after the halving event, not much happened actually. Bitcoin was just in a sideways consolidation phase for, let's round this up for 50 days, and then it resumed to the upside. We saw like a massive pump, really a massive pump of 1840%, which is, I believe, really impressive. So as we can see, no immediate effect. There was maybe there was like just consolidation, and then it resumed to the upside. So the second halving event, we saw actually something similar. One, we saw a drop, like a post Bitcoin halving event drop of 30%. And not only that, we saw here another consolidation phase of many days of 100. Let's round this up, like 120 days before Bitcoin eventually resumed to the upside. And then here we had another. This was the third Bitcoin event, and I think most of you have experienced this one. At least I have experienced this one. What do we see here after the halving event? What happened actually with price? Not much actually. So at that time, the halving event was actually a nothing burger. It was actually non-event, because before we actually feel the impact of that halving, um, it just takes a lot of time. So this was a consolidation phase of 150 days before Bitcoin continued to the upside. I believe and I reckon this time it's not different than the previous time. So this was the third Bitcoin halving event. We're going to see another Bitcoin halving event. So just from a price perspective, what we're seeing at this moment is boring sideways price action, right? So whenever you see sideways price action, always ask yourself, what's the primary trend? What's the secular trend? Where does this consolidation, where does it come from? It's obvious. It's coming from a uptrend. Often when you see a rectangle or like a range bound, I rather prefer to call this a rectangle. More often than not, this is a continuation pattern. So I reckon this is a continuation pattern. Rectangles, however, they are known for a few things. One, there are many fake outs. Two, it takes a lot of time. And three, it drains. It really sucks. It absorbs people's patience. So people are basically losing patience, and at range high, people are really bullish. At range low, people are really bearish. We all know that a few days ago, when Bitcoin was hovering here around 60K, a lot of people, they turned bearish because it looked really scary. Because the at that time, if the scenario many people had was, if we lose this, range low, most likely Bitcoin will drop to 50K and eventually to 51K, revisiting this range, this consolidation of February of this year. I can understand that feeling. However, when you just play the chart, it was just at range low. It even printed a really nice swing failure pattern, and it resumed again to the upside. I'm still not convinced. My hope is that it will reclaim mid-range, which pretty much aligns with the point of control. If this happens, very likely that Bitcoin will revisit range high. So just to come back to my previous point, will Bitcoin explode? TLDR, not immediately, I believe. I truly believe that short term, this halving event is going to be a nothing burger. Many people will be disappointed, especially noise traders, people that craving for instant gratification. They gonna be very disappointed, and I wouldn't actually mind if we're gonna see some sideways price action, resetting some of these oscillators, It would be really beautiful if people, if they get shaken out. As I told you guys, rectangles are known for a few things. One of them is shakeouts and fake outs. So I wouldn't mind to see like a fake out here and a fake out on both sides and having like a ranging environment, which could be really nice for altcoins, honestly. One of the charts I often watch is Ethereum against Bitcoin. And I know this is actually a really boring chart, because it's just in a macro range, right? This is just a range. Just recently, we took out this low. Honestly, like from a TA perspective, this really doesn't look that beautiful. What this tells me is the primary trend, like Ethereum against Bitcoin, is actually to the downside, which is really obvious, right? As you can see, it's to the downside. However, we have like some bullish arguments. One, we are seeing here some form of bullish divergence. This is actually double bullish divergence. We took out this low. This could turn into a bearish retest, meaning we could see something like this and then more downside price action to the downside. And that's always the case with swing failure pattern. At that moment, you just don't know if this is a swing failure pattern or this is a bearish retest. Because we still need a few candles to confirm what this actually is. But given the fact that Ethereum is lagging against Bitcoin, and of course Bitcoin there was a lot of demand to Bitcoin, mainly because the ETF. And talking about the ETF, as we can remember, on the day of ETF, what happened actually? On the day of ETF, the 11th of January, something died and something vanished. It was the spot ETF hype. At the day of lunch, there was no hype again about the ETF. What we saw is a strong decline of 21%, even more, a little bit more. And I assume and I presume that something similar will happen with the halving event, because at the day of the halving, the hype about the halving will die out because there's no hype anymore. Because the next halving on the day of the halving is 210,000 blocks away from the day of the halving. So that's another 4 years. So the halving in itself is not priced in, but the momentum, or the hype, I should say, is priced in. Just like with the ETF, the hype of the ETF on the day of launch, the hype was priced in, but the real mechanism wasn't priced in because it's just impossible. Big asset managers allowing their clients to buy Bitcoin. So this takes time, just like with the ETF. Also with the halving event, it will take some time. So as for now, what I see locally is lower highs. We see like a high, lower high, lower high, lower high, lower high. But here we see something forming. I shared this setup. I think it was Wednesday that I was long, small position size. Honestly, I regret a little bit that it was just a small position size. In hindsight, it's always in hindsight. But we saw here, some few signs of a reversal. One, we see that Bitcoin was actually at support, created a swing failure pattern. So at that time, we didn't know actually if this is a swing failure pattern or could this be like a potential bearish retest. My thesis was this should be, or this like a higher probability that we're going to see that swing failure pattern taking the lows out from March, mainly because we saw like a divergence forming in the oversold area. This so brought me to the thesis, probably we're gonna see a bounce very soon. Of course, on the day of the trade, it looked a little bit scary because a lot of people, they were too scared to open long positions. But me as a reversal trader, that's actually where my edge is, doing something where people refrain from taking action. I believe the asymmetrical bet often is when people are too afraid to do something that gives me an edge over them. Of course, often I get stopped out, but when I'm not, I'm making really good R, and that's actually the point. Sometimes you can take 9 trades or 10 trades. You just need to have like one winning trade, and that one winning trade will easily compensate the previous losing trades. So what do I want to see here? Well, it's really easy. From a biblical perspective, I want to see price claiming the 66K and then taking a closing above the point of control. If this happens, I would say there is a 70% probability that Bitcoin will then resume to the upside, resume towards 73K. Again, this is a rectangle. A rectangle is known for what? For many fake outs. So we could see some spikes, taking out this high and then going back to mid-range. If we don't see a bounce anymore, then it could revisit range low. So if I wasn't in a position, then I would open a Bitcoin position if it has reclaimed the Biblicator Pro current time frame trailer, which sits at 66K. I use the Biblicator Pro as sometimes it's Confluence on top of my own system or as a standalone trading system. The other point of that would be interesting to add more to my position sizes if it can reclaim the point of control, because then it already reclaimed the Biblicator Pro current time frame trailer and the mid range, and that would be like a double win for bulls, because it just signifies that bulls are here, that they are not giving up, since the fact that it was curling up since 59K. To circle back to the Ethereum Bitcoin chart, this is a boring chart, and you see here a bullish divergence. But this double bullish divergence on a weekly basis, understand that this will take a lot of time before this actually plays out. One of the things you often can do is measure the bullish divergence in time. So how many bars do you see? 25 bars, 175 days. Before we actually see the bullish divergence playing out, it will take around 100, maybe 175 days. So of course, it could escalate. For example, if the Ethereum ETF will be accepted, I don't think so. And I also don't believe that we need a Ethereum ETF to see a new all-time high on Ethereum. With all-time high, I mean Ethereum against stables, against USD. But this is just I'm just trying here to tell you guys that it's gonna take a lot of time. So weekly bullish divergence is gonna take a lot of time. Just like what happened here with Bitcoin, there was a unique bullish divergence formed here. I can't recall that Bitcoin printed a bullish divergence, or the chart printed a bullish divergence that came from a oversold area. I believe it was the first one in Bitcoin's history. Also, if you go to the Blixie chart, there was like one time where Bitcoin, I think it was here, that Bitcoin printed the chart printed a bearish, bullish divergence on the weekly. So what do we learn from here? One, bullish divergence often on the weekly has a high predictive power. Two, it takes a lot of time. So here again, what you do is you measure how many days it took to form this bullish divergence. Let's round this up, 170 days. So just add these days to the day that the bullish divergence was confirmed, like technically here, like right, it didn't go lower, and it takes just a lot of time. And And on the way up, there were some, consolidation phases here, here, and here, and probably something similar, I assume, will happen with Ethereum against Bitcoin. If this happens, I reckon a lot of altcoins will go crazy, and we're gonna see some crazy altcoin season. One of the coins I'm watching now is Litecoin, and again, you need to understand when you have an edge. Mine edge is when people are find it too scary to buy something. In June 2023, we saw that if Link was breaking this range low, let me make this a little bit bigger. So what does it mean when things are breaking range low? It means that people, different biases will kick in and they will stack up. One, negativity bias, recency bias, and herd mentality. The moment that Link broke this range low, people were making a lot of bearish scenarios, thinking that it could go lower. Of course, it could go lower, but at that time nobody wanted to buy Link, and at that time it was actually the SEC saying that Link was a security, and all these others, coins were a security, like Chilis, and I can't even recall which coins they mentioned, but Link was one of them, and the market actually overreacted. Especially in a bear market, the market is really good in overreacting, and in some cases it's underreacting. In this case, it was a strong example, good example of overreaction. And if I see a strong overreaction and I am fundamentally bullish on something, for example, on Link, I just buy, even though a lot of market participants are not buying because they are too afraid. And just understand that most of the decisions many people make is based on emotions, always have been. For example, if you buy something, it doesn't matter if it is a product or an asset or an investment, emotions, they will kick in. If you want it or not, they often happen subconsciously. So again, talking about the biases, this chart here displays a few biases. One, recency bias, because people, they see this downtrend, obvious, and they think it will resume. Herd bias mentality, a negativity bias. It means we give more weight to a negative event. When things are going down, when it's red, we see this as a negative event, and a negative event has more impact on the brain than a positive event, because that's the way how we are, engineered. We are really sensitive to negative events because it triggers basically the survival mechanism inside us. But this fear, this survival mechanism, is not always so helpful when it comes to trading and investing. You should really understand this. If you want to take advantage of fearful traders and investors and people who are dumping out of overreaction. So I'm not buying Link anymore because I think I really had like a nice entry here. It escaped this range, and again, time really matters. If you see like a long range of, how many days was it, 530 days, and fundamentally it's okay, then I believe this is not a really terrible place to buy. And I believe there are some other coins, they are still in this accumulation phase and they still waiting for a breakout. Of course, it could also turn in a breakdown. So always make sure that you know what you do when it comes to risk management. So what do we see here? We see here another range. A beautiful range. It's like a breakout. And then suddenly, I hoped here for a bounce. We had no bounce, but it bounced from here. So this is a 3-day chart. This is the 1-day chart. If it closes like this, honestly, this is not like a bad close. Really long wick, like a bullish candle here, long wick here. This was a beautiful I would call it like a swing failure pattern, right? It took out like the low here, like the entire rectangle basically. It took out like all the different lows. Perhaps I would play this as a trade, but this you could consider this as a not a beautiful divergence, but there's some divergence, right? Like the price is not like really making a lower low. It's almost like equal lows, but the RSI is here. It is curling up. So if your thesis is that Bitcoin will resume to the upside, to the mid-range, for example, then this setup does absolutely make sense. And I'm not too keen to place a stop loss below this wick here. It's going to ruin the risk-reward ratio. And since a lot of trades have been shaken out here, I don't see like any good reason to put a stop loss below this level. I rather prefer to have like stop loss below this level. If it can create here a base, then I do see Link moving to the upside, back to range high of this consolidation phase. Another one I'm really bullish on. Both token on the day of launch. It did really well. I shared this on Discord also. It did many multipliers for us. I think this was the day of launch, or it wasn't. Probably I should check token on USD. No, just token DEX. Yeah. Oh yeah, here it was. This was the day of launch. 12,000% up. If you measure it like from the day we bought it to the all-time high, 3,000 something up. That's really not bad at all. But let me go to my other chart, because I believe the price action is there more clear. I think it was Maxi, right? Yeah, it was Maxi. I'm really bullish on real world assets. I'm invested in a few. Jimmy, I'm invested in a few of them. One of them is Token, one of them is Rio, and then there's another one which is pretty small cap. I think it sits now on 3-4 million market cap. So be aware, high risk, very high risk, but again also high reward. If it can surprise us. So what I like from Token is charts that look organic. So we see like resistance, a breakout, really nice throwback. Normally, I don't like it when throwbacks, take so much time. It took, because I really like time really matters in trading. If you're in a trade, let's say based on a 4-hour, and it takes a really long time before it gets to the TP, more often than not, it's just better to close that trade and find another setup. Because I believe time can also invalidate your setup. It's not only price, but also time. So anyways, really beautiful throwback. And then up it went, I think. This time it was, I think, BlackRock saying that they were really, bullish and optimistic when it comes to real-world asset and tokenization. Many of these tokens, they just pumped, like Rio. This one pumped, Soil, Credify. Many of these high-quality real-world asset projects, they pump pretty hard. So it pumped and it retraced. So what I like is it bounced here from the 708 or 0.702 Fibonacci level, which pretty much aligns here with these local tops. At that time it was like a local top, right here, before it confirmed the throwback. This is what I like here that we see a not really beautiful, but nonetheless, this is a RSI breakout. It has less predictive power when you do this on a 4-hour chart, more predictive power when you do it on a 12-hour chart. Like this. If I was looking for a trade setup on token, I wouldn't be too bearish here, because what I often look when I look for a trade setup is a clear point of invalidation. So the price should tell me, okay, at this point you're invalidated, so stop the trade, cut your losers or your laggers. And secondly is at what time will I close the trade? Because price can invalidate you, but also time. I believe this is a pretty decent setup, especially if you think that real world asset, if you believe they will catch up. If you think they will catch up, then something like this absolutely makes sense. Do we have any questions, by the way? Do we have questions? No, we don't have. Let me quickly check what Bitcoin is doing. So the ideal scenario here with Bitcoin is going to confirm that it took out the low from Wednesday by a few candles and the low of Thursday, and closing at least above the Biblicator Pro. And again, I believe if that happens, then mid-range is next. If mid-range has been reclaimed, I reckon 70% probability that it will revisit range high. But please, on the day of the halving, don't open the chart and ask yourself why is Bitcoin not pumping? Why is Bitcoin not pumping? It will take a lot of time. If you just go to if you go to here to the blocks, a lot of Bitcoins have been traded in these blocks, right? Many Bitcoins, and a lot of Bitcoins are already in circulation. Thinking that miners reward going from 6.25 to 3.125, it's not going to make a lot of difference. I mean, yesterday we had like a good conversation with Quantum Expeditions. A lot of Bitcoins are being traded every day, every single day. Millions of Bitcoin are being traded every single day. Don't think that 400, a cut in supply from 900 Bitcoins to 450 Bitcoins on a daily basis will make a big difference. This will take a lot of time. Last time it took us 150 days. I would be surprised if it didn't, if this time would be different, really. There's an interesting question. Do you think market can front run from here? Yeah, I think it's possible. However, I don't think it's the highest. I don't believe this has like the highest probability. Let me. No, I don't think so, for a few reasons. One, like last time I shared this chart in Discord, This is actually telling me a few things, the fixed index. So the fixed index, it goes up and down. If people are buying options, and people buy options to hedge themselves or to speculate, this is the fix. Just looks to the S&P, but there's also a fix for basically different indexes. I feel like here a list of here. This is the fear and greed index, or it measures basically the implied volatility for the Nasdaq, for the Dow Jones, for Russell. I mainly check actually the S&P. I do this like once in a week. If you see this, just know that there is a inverted correlationship between the S&P and Bitcoin. Why do we actually talk about this? I believe that when the S&P is actually in a bullish trend, or the Nasdaq, more often than not, this is pretty good for Bitcoin, because there is some relationship between Bitcoin and the legacy market. When I see this correlation, then I can only make a few conclusions. Here, the S&P. Oh wait, it's gone. Hedging is pretty cheap at the moment. The implied volatility, it's okay, but not so long time ago, we saw like a huge spike. And often when there is a war going on, or there's a lot of tension, people, they want to hedge themselves. Like a spike of here, like 15% on one day, 11% the next day, from the the opening to the close. That's pretty significant, because it tells us that there is some fear going on among big players. And big players, they don't like uncertainty. So when they think that there is war coming, or they see a lot of tension and they see a lot of uncertainty, they want to hedge themselves. That's what big players do. So I'm not sure why this disappeared from the chart. Here, the S&P. Apply. Oh yeah, here it is. So 1 is 0. It means actually there's no correlationship between the S&P and the fix. 0 is a strong relationship. So if you go to the weekly chart, more often than not, and here this is pretty unique, as you can see, because it doesn't happen often that it crosses the 0 level. The 0 level, it means there's actually no correlationship. 1, it means there is strong correlationship. -1 is basically the highest level you can get. It means there's a strong inverse relationship. Whenever the fix is down, the S&P 5, the S&P is up. Whenever the S&P goes down, the fix goes up, because people, they want to hedge themselves. So I do consider this as a point of concern. Ideally, I don't want to see the the fix going up even more, because it means big players, or at least like people who think that hedging themselves or speculating through options, it just indicates that there is fear among investors. Let me, yeah, I have this line here to make it a little bit more clear. This is actually a chart I watch once in the week, actually, unless I do different live streams. As of now, I could say, it's in the range. Honestly, I was here pretty optimistic, as in I hoped for more downside, but it didn't give us like a downside. It gave us, it gave us, uh, everything. Like the dollar was pretty strong against the euro, the yen, and the other currencies. So yeah, the question is, can I take out this high here and resume to the and then resume up, or are we going to see some form of retracement? So locally, you could say, okay, this is maybe an exhaustion, but then will this lead to another higher low, or are we going to see a strong decline? Honestly, I'm not really into forex at all. I know it's really important to have like a good understanding what the DEXI is doing, just to have a little bit of context. I'm not using, the DEXI to make um, trade decisions. I don't think it's really helpful for me. Of course, when a DEXI goes up, it means risk on assets, they will suffer. They will suffer. But if you have like this approach and you just use the DEXI in on that level of isolation, it really never worked for me. This is the euro against the dollar. I mean, yeah, not sure what to make from this. To be really honest, I don't really have an edge in this. I just know when the DEX is going down, more often than not, this is actually a quite good thing for risk on assets. Elliott wave, I had like Elliott wave during CMT. I'm not a too big fan of it because it's extremely subjective. There are a lot of rules that rules out other rules, and these rules rule out other Elliott wave rules. I have a lot of respect people using this methodology, but me myself, I'm not using it at all. Um, Let me check if there are any questions. No, guys, I've been rambling here for more than 42 minutes. I have a request, really. If you watch on Twitter, give it a like and retweet. If you watch this at the moment on YouTube, smash that like button, right? Smash that like button really hard. It should also it should make a noise, right? Like this kind of noise. Smash that like button and leave a comment. If there's any specific topic you want me to address for the next time, let me know as well. I believe that for the next 200,000, 10,000 blocks. So from the moment we're gonna enter the halving, and then the next 210,000 blocks, really, this is my advice: is one, invest in yourself. Don't be too greedy when it comes to buying books or testing out systems. I truly believe that 2024 is packed with a lot of crazy opportunities. So have a plan, have a trading plan, know what to do. Um, because if you don't have a trading plan, you don't have anything to rely on. Just having few stupid principles in your mind, it's really not going to work. I've coached a lot of people, a lot of traders. Um, those who know what they are doing, they have a plan. See this as a business. If you're playing with money, and let's say $1,000 is a lot of money for you, or $10,000 is a lot of money for you, don't gamble that money away. Really, you really need to understand what you're doing. Consider this as a business. There are a lot of business opportunities, and you can penetrate this market by having an edge, like a mental edge, a technical edge. Um, but have this, write this down. Otherwise, it isn't a plan. It's just, idle hope, and it will not bring you really far. My wish is that the WordPress community will flourish, and I'm gonna do everything what it takes to make them flourish. And I hope that our followers on Twitter and YouTube, they're gonna flourish as well. So my piece of advice is um, really, like, make that trading plan for yourself. A trading plan should contain a lot of different things. One of the things is how are you going to react in what kind of, in different type of market conditions. When are you stopped out? When is your thesis invalidated? What are the categories you want to double down on? For me, example, I'm really bullish on AI, real world asset, deep in ordinals, mainly because of the halving. I'm now also really bullish on ordinals. And my portfolio is also engineered in such a way that real world asset, deep in AI, they have like the biggest share. I've allocated most of my money to these specific categories. One thing is really true: the price action is like there's a lot of randomness on a daily basis, right? Of course, like the secular trend is up, the primary trend is up, but now there's a lot of intraday noise and there's a lot of randomness. If you want to excel in an environment where there's a lot of randomness, that there needs to be one element that needs to be consistent, and that element is you. If you just do things randomly, just randomly buying things without knowing why, actually, it means you're really random in a very random environment, and the chances you going to make money and keep that money is minimal. If you really want to make money, good money, uh, invest in yourself, invest in a good edge, in a mental edge, in a technical edge, and having trading plan, and divorce from randomness. You need to be very consistent in your approach. There's another good question. Layer twos, I think, if you look to DeFi Llama and see how much value all these layer twos have, I think there's a lot of money that channeled from from Ethereum to layer two. Yeah, myself, I'm pretty bullish on layer two, but I don't have a lot of exposure, as I believe um, deep in AI, real world asset, they have like a stronger upside potential compared to layer twos, unless this layer two is a new kid on the block, a newly launched coin with a lot of potential, backed up by serious people with a working technology, with a low market cap. Then I might jump into some layer twos. But as for now, I don't really believe that layer two will be the biggest narrative for 2024. Okay, guys, let's call this a call. Let's call this a live stream. Thank you for joining me. Again, hit that like button. If you don't hit that like button, I'm going to hit you. This is, by the way, a joke. Until the next time, see you around.